Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. Welcome to 145th edition of Investdata Trading Academy live with Ambrose. I will say that the market across the globe, as we speak now, has rebounded into green, which is a good news for many equity traders. But we can see that other instruments around the world were seeing a kind of market trying to resist a decline. It's a good news for investors, equity traders, and the others in the market. But we'll see emphasize that at the current market situation, we are seeing that volatility has continued on a high or on increased magnitude. That means this is the right time to use all we have been discussing in this class, all since we started, that you must apply your protective stop loss. You must use your plan. That means you must change your plan so that you can achieve what success trading equity or investing in a stock market. That means your entry and your exit strategy will be intact and your profit target so that you won't be carried away when the market is on the upside and you think that no, that is the whole of everything. Before you know, that's the market that have taken you up can equally bring you down. That means once you see your position is in the uptrend, yes, unless you have other factors or you are seeing strong momentum in that stock that will continue to go up, but you should also know how to take profit gradually, even though when it's hard to make, because setting target from the one is very, very important. That's why I tell people that stop loss is even more important than what decision to jump into market, because before you buy, as you are taking decision, you know exactly the accommodate, you know the kind of loss you can accommodate as individual. We have different level of tolerance in terms of risk. Those that can take high risk like me, I can do anything in the market, but those that cannot take sorry, your stop loss will always guide you so that you know what to do. And that is why also I will always encourage investors or traders in the market to always have two portfolio, or can have as many people as six portfolio, depending on what on your very day. Those portfolio for trading will depend from if you are trading for what for long term. Long term, you have opportunity to know to go for medium to long term. But for traders, a day to 1 week, maximum of 1 month, you are trading that position. But once they see and what attracted you to stock are still intact, you are good to go. Now, I see that as we speak, no, the global market is in green, as I've said earlier. We have seen that market across the globe. Look at what is happening in US this morning. US open on a higher note. We are seeing their market rebounding after 4 days, almost 3 days straight decline because of what? Because of rate hike. Also in Europe that have suffered even more are also rebounded this morning. But I will tell you, in all this, the investor sentiment are still very weak. No, it is information that are coming from left, right, no, either economic news or expectation that are supporting the market right now as we speak. Because the rate hike have not finished, because as far inflation is going up, they continue to work to do this their work. They are monetary policy tightening across the globe. That means you as an investor, it is time for you to sit down and see which sector has gone out of favor because of this rate hike. Which sector is this policy is it going to favor positively. You need to know so that you know this will guide your work your decision. And that is why I said at the end of the quarter is coming. I see that rotation, sector rotation will continue. Portfolio reshuffling will continue. And what? Because ahead of what? Another earnings season. And I told you earlier that this earnings season and also the fundamental of the market, which is also the liquidity is very, very important in this kind of brand across the globe. And that's why now you can see that oil price also that have pulled back recently has also rebounded as we speak now to trade around the above $85. That's going to as well almost 84, but as we speak now that rebounded up, which is also a good thing for the global economy. But I believe that the fear of recession will continue to work to move the oil price up and down. But the continuing war in Russia is also a plus for what for oil price, even when though the US are trying to cap or the Eurozone, but because I know that as distortion continue in that flow, that means oil price more likely end the year below what? Below sorry, above $100, and that will be a good thing for that sector. And this is time for you to know that as the rate is being high here and there, which sector is going to benefit from it? If you come back here home, you can see that since over 2 weeks now, or getting to let's say more than 2 weeks now, there are some sectors that are having special attention, either because of what interim dividend they have declared or improved earnings we have seen in that sector. It's also going to guide you what to do what as going to work into the fourth quarter of the year, because as we speak, the fourth quarter of the year is already here. And as we speak now, as I said earlier, that US market is already in green, which is a good one for the market, but on a weak sentiment, Also in Europe, market stocks are high. Okay, down to Asia and Africa. Asia and Africa is still mixed, but as we speak here in Nigeria, our market is in green, extending what we saw yesterday. Like I told them in one of the programs this morning that what we saw yesterday, market closing in green yesterday, almost about no 0.39. That is what we call, for me, we saw a bullish engulfing. But in technical analysis, when you see market going down in that manner, and you now see kind of a rebound, might call it a dead cat bounce. But until you see sustainability of that trend today, that will not say yes, market are recovered. But it's a good sign that we saw. If you look at the technical analysis, I think that there's what we call a new uptrend already that we saw yesterday, because what market closed yesterday was higher the previous day. It's telling that a new trend has come, but we need us to stay, because you look at the volume that also brought the market up yesterday, it's also small compared to what we saw the previous day. These are the things, but we saw improved buying sentiment, about almost 95 buying sentiment against 5% sell sentiment, and also saw that money flow move from as low as almost 15 point something percent to cross 20 down 21. That is good for for the money flow as at yesterday. It's a sign that money, and this is that yesterday that the MPC meeting for 2 days open, but you see that investors are looking at, because we have seen that this is the first quarter that we're seeing that the market is closing almost in the red after like 5 quarters. That's why we want to quickly look at the chart, because we have a lot to do on the chart now before looking at the market performance. But let's look at the chart as we speak. Yes, market is doing around 49,200 and 200.2% up, remaining about 10.88% up. The market are up about 0.3, which is good. I agree with you. Look at the market breadth. Market breadth is positive, 11 gainers against 9 losers. That is, we have internal leading the gainers chart, followed by Covey Business Solution. Covey Business Solution. Also, we are seeing a Cabri on that chart. Also, NGS rebounding after touching as low as 17 naira, which I believe that it might go lower before we rebounded. But rebounding, we want to see also the number that we're expecting. We'll see how far to go from here. But it's a good move for the rebound of NGS. We saw champs also on that chart, also that one like UCAP, all those ones are there. Zenith Bank on that gainer chart. But if you go to the loser chart, we'll see me and Baker leading. Also, you can see Regency Insurance, you can see also Vital Food, and also Consolidated Hallmark Insurance, it's also among them, and Mutual Benefit. These are the top 5 losers I speak now. But you look to the other side, which is the volume. I tell you, volume is very, very important. I will always say it anywhere, any day, anytime. Either on a weekly chart, on a daily, on a monthly, it's always good to look at it. Volume as we speak now, that is supporting the market, is about those stocks that are top on in terms of volume traded so far. Vital Food is leading, followed by Linkage Assurance, you can see Transcorp, and also Jacob Gold, and the Consolidated Hallmark Insurance also in that category. These are good news for the market as we speak, and as all eyes and what at the outcome of MPC meeting. For me, it's a good start. If the rate is either retained or adjusted up, I see that the market also have what we call a change of direction. If they retain the rate, yes, because of inflation, fine. But if they had the rate, the market will also find a way to beat that. The beat that we're seeing across the globe is a result of people looking at market coming towards a strong support level before rebounding. That's why I said market almost touching 49,000 rebounding. It's a good one, and we're seeing that we'll see more buyer in the midst of yesterday. We saw more sellers than but we saw big cap stocks like Boasman, NGS, we saw the life of Union Bank, all of them getting yesterday also impacted the market yesterday. But let's see how the trend will go. But I believe that in the coming master class where we're discussing the impact of this outcome of MPC meeting today, and also the sectors that will benefit from if there is hike or no hike, because we have seen inflation already. Where is money going to flow from now? We have seen also that the PFA that we're looking at to play the market. Yes, is the market cheaper for them now? I see yes, market are pulled back. If you look at the market, the general market, price to earnings, it's also below 11. Compared to what it is, like 4 or 5 months ago. Then the market has pulled back, and that pullback also creates opportunity. That means most stocks on the exchange are really undervalued, especially those that are having high dividend yield and high earnings yield. To tell you that this is time for you to look at take opportunity in that. But I believe that the market for me, especially as we are entering the last quarter of the year, don't forget that any moment from now, this is the trading week of this month, and that will usher us into what the fourth quarter officially, and that also comes with what with seasonality and also any season being the first thing that will usher into that month. By the month of October, we've seen the company rolling out what their corporate action for the third quarter. And I told you earlier that third quarter is as important as almost the full year, because in third quarter easily no forecast, and also this because of time value of money that we're seeing, we expect more liquidity to start coming back to the market for them to take advantage of those low prices of the stock. And at the same time also, don't forget that the result of most of this company, as I've said yesterday, that as at Q2, most of them have surpassed their full year. If at the same time again, we are seeing third quarter that will give you a clear vision whether their earnings will support a higher dividend payout. If that happens, that means market will be where we can take advantage of what I said yesterday, time value of money, because in the less than 6 months, we know what we gain from the world. Some equity that has already reviewed their earnings yield and their dividend yield as we speak now. That means for me, there's no cause for alarm. Like I said, this is the final week for the third quarter. And as the year runs to an end, as we're entering to the last quarter of the year, the seasonality that comes from it, or that comes with the seasonality that comes from the end of the year, will also be enough to guide the investor what to do. That means we want to finish this year strong, we must be in good stock. And that is why we must not miss the common master class, because those stocks that will take you up for the next 90 days, we have seen that after almost straight 4 months, we have seen that this third quarter is the first we have seen a pullback, and that is why most of them we took earlier. That's why most of them are staying green. But we believe that because of the seasonality that comes at the end of the month, the 90 days we're looking at the fourth quarter of the year, there are some stocks that, especially two stocks that we're going to discuss in the master class, that we got 50% minimum before the end of 90 days. And those stocks are already giving us sign. We're waiting to seek to confirm today's outcome from MPCB, so that will also be announced in the coming master class. That's why you must be there, so that you can recover what your loss, at the same time boost your gain if you are in profit. Because I will tell you, there's potential in the market. I believe that also be the first attraction for the PFA, that we didn't see them since the end of the second quarter any season. I believe that Q3 will open their eyes, and also I think are trying to also balance their portfolio, even for long term investment and all, for their clients and all those stuff. I believe that they will look the way of equity market very soon. Also, if you look at the stock on it, they will tell you the market is undervalued, and that give you a kind of signal that at this time people will be looking at what for value, and that value is what will guide us in taking decision in that master class, or with the help of chart, because chart will tell us exactly what to do. But we need to also to finish the year strong, as I said earlier, because on Saturday they will be hosting the master class. I want you to be part of that class, because in that master class we want to take a step back and look at analyze the direction of the major trends, and also where there's a breakout or where's the breakdown, we'll let you know. And also we must also make advantage of the short term time frame for you to get more real opportunity to take advantage of, because it is that class that at the end of the class you look at your portfolio and know what to do with your portfolio. And don't forget that at the end of the class also we are taking decision the next day. And all the stuff that I'm going to recommend, that if you are a portfolio, I always say that means you are in a good position. If not, you sell off forward. And also I said it earlier that those stocks that should not be your portfolio will also be discussed. Stop to sell now as you prepare for the last quarter of the year, and also for the first quarter of 2023 by God grace. For that, you must make time to join us at the Common Master Class. Yes, we want to quickly look at the chart in different. We want to look at the chart on the daily, the chart on the weekly, and the monthly chart. So let us know exactly what has happened, because this already the last week for the month. We want to look at how the market has performed the month and where we are going from here, so that we know exactly what to do as traders and investors in the market. We need to. Yes, this is let me call some indicators out. Yes, we'll be looking at other stuff, but let me finish from the multiple time frame we're going to use now. From there, I'll not tell you the stuff that were mentioned that we want to look at their chart in the value. But then look at the time frame, but I want to call some indicators up. They are very, very important as we speak now. Because of we're looking at these stocks, we'll go to our stochastic oscillator, look at our money flow, and also we need a MACD and the 50 days moving average. That's what I want to use today, so that we can look at it together as a family, as a class, so that we know what to do next from here. We change this to our 8 days moving average, because it's very, very important. 8 days exponential. Then before we now call up the 50 days 50 days moving average, simple moving average, and 50 days exponential. We want to look at the two together here so that we know exactly 50 days moving average. 50 days moving average. Moving average. The line color started. Right there. This for that then I need another moving average which is the exponential moving average. So 50 days moving average exponential again in this chart. We want to look at something together. Days moving average color color. I need a black color now. Okay, black color now. Okay. Okay. Yes, you wonder that we've not used this multiple moving average here, but today we are looking at them because they are very important to us. What we want to do this morning. If you look at the T line, market is slightly in the T line. Let me also open so that you can see it very well. That when we're saying, you understand what I'm saying. I'm not speaking big. Let's open it here together so that you can see it here. Okay, you can see that market yesterday was in green. This morning, you can see that market is slightly also in green as we speak now, which is a good one. You can see that we're seeing a positive movement in the market already, or or we call it sorry, stochastic oscillator. Also seeing positive trend also in money flow from 21 to almost 24 this morning is a good one. But market is still below what the T line and below all the moving average that we've kind of displayed the 50 days exponential and then 50 days simple moving average. Market is below it. But let's go back so that you understand what we want to do. Yes, this is the market now. Yesterday, I told you that the market had already at overbought region, over sold region, sorry, and you can see that I told you that yes, the money flow was looking down. You can see that yesterday, money flow started looking up again, and that's still over sold region. I can see that trend continuing this morning. Yesterday, market in green, you can see it at this hour. For me, like I said, yesterday, market gaining. We saw that the candlestick yesterday was higher than that. But that we call a bullish engulfing and put is also good for you to understand. But as we speak, I'll tell you that market is still finding trying to like come up to bit to break out the T line. If that is done, then the market also started on a new trend, on a new move. And this move will depend on what come out at the end of the day. But if yesterday and today that we have an NPC meeting, market still maintain a positive trend, for me it's a sign that they might see interest rate on change. But if that happens, that will be a plus for the market because sectorial rotation or sector rotation will continue into the world into the last quarter of the year, and that is for good sign that there are some industries and some sectors and some where people will sell enough to enter position because what I think that policy and what and vision statement one or the other has to work what like I said, if you want to trade in news, you don't look at what is coming, look at what they chart. You must understand what the market direction and the chart direction where you are looking at to see what is happening. Because the candlestick will reflect what the attitude and the sentiment and actually the psychology of people in the market. This is what on the daily chart, and we're seeing that market is looking up. So for me, it's a good one. Yesterday and today, the trend still maintained. Money flow is positive. You can see it here, and the all the all the moving average that we got up here, we can see the market is below it. Say the market is relatively weak on what? On a daily chart. This is a daily chart. Here, if you want to look at 1 hour chart as to speak, 1 hour chart also give you insight. 1 hour chart, the market has crossed the T line, it's above the T line, and you can see it here that you can see strength, money flowing almost 44, and you can see but a sign here that on also the possibility of reversal is here, because you can see that also that the market has entered overbought on what overbought on a 1 hour chart, because this is a day chart we're looking at. But because I said we want to look at the multiple time frame, want to quickly look at, we have seen the chart on what on a daily chart, we have seen on a 1 hour chart. Let's look at what the chart looks like in a week, on a weekly chart. Let's look at what the chart looks like. On the weekly chart, what will give many people a kind of show them a kind of rest of mind is that if you look at the market on a weekly chart, that's why I say let me look at this green is for this black one is a 50 days exponential, while the red one is a 7 day simple moving average. If you look at the market now, from here you can see that the market has been above the T line. They try to kind of consolidate, but still above the T line, in and up, above the T line, above the T line. It tested it up, up, up. You can see up here. It is not too long that market crossed down the T line and started coming down, and market remained on below the T line, but still what above the 50 days moving average on a weekly chart. This stage, and also on a weekly chart, the market is already what on oversold region. Tell you that you can see what comes after the you can see. And for me, this oversold region is not enough to look at. You look at what's the momentum in the market now. Momentum in the market now, that the momentum in the market is weak. Once you see a stronger momentum that will support this, you cannot see that there will be a reversal. You can see here, even when the market got to what a point where it's a oversold region, and you see that that the blue stock confirm it here at this point. If you put your line here, and you can see that at this point, after the candlestick have formed also a what we call a hammer to resistance. That is the point across the red one, and from there you can see that the market maintain what an uptrend. You can see it remain, and the momentum remains strong even when it tested back to the T line. It tells you that even when it comes down, it didn't go far into what below what 50. That means that it's still strong because of that. Then you can also see that maintain, and it maintain an uptrend until finally where what after I say when you see that the price action and index action is far from the thing, like I see when it gets far, the more it gets far to that, the more it takes the time to take profit. So what happened here, started coming down, and that changed the momentum down again. But it's actually for all this while on a weekly chart before what is not see another move. And remain above what and move to the T line. This will tell you that this, if you want to hold position, this is what you need to hold position. That's why I said taking profit gradually, you can easily know when to do it, and when not to rush out of your position, because you have tools that will guide you know how to do, and how to also catch your top and bottom will also be what I want to discuss. That means so analyzing time and price for what for proper tops and low, when to buy and when to also exit. You can see on the weekly chart the market is still strong. Yes, finally, we want to look at the market on a monthly time frame to see what I was saying earlier when I was discussing. If you look at the market on a monthly time frame, you can see that market is still above the line. Just tested the T line, it has not broken down the T line. And you can see for yourself that for the past almost 3 months or 3 to 4 months now, since May, market has been on a down trend. After that, you can see the market is set to take out, about to take out what market gained in the 1 month of May. That is why I tell you that market is still very strong. And don't forget that when market rally, there's always opportunity for market also to pull back and continue. The when market pull back and continue, that is where strength is. Also, if you look at here that have turned to tops, and here this is another top for the market, another top. So, but at this top now also have turned to do what another support level for the market at this point. Here, you can see here and here are top market pullback and continue. And when it goes like here now become another one, these tops you are seeing here now become another strong support level for the market and continue until market take away this square here. When I say there is fear, and also take away this top again now. Before when I say the above, I believe that as far as market is above the T line, there's no cause for alarm at all. But also, if you look at your momentum indicator, which is very, very good, and momentum, I tell you, you must go with momentum. On a monthly chart, I think that momentum is becoming weak. Now you can see that it's already looking down. And it says that the momentum in the market is weak on a monthly. But on a weekly, you can see that it's still strong. On a daily, you can see that there's opportunity. That means we need to, for this a long-term time frame, that's why we'll tell you that the market are also prolonged, the pullback for almost 3 months, 4 months now. I would believe that what will happen at this last trading week will usher us into a new direction. As we have seen yesterday, a market, a new trend has started already yesterday. It is the confirmation that we're waiting for today, what the market will close, and also how the market react to what react to the outcome of MPC meeting. You can see for yourself that the market is still very, very much intact, but the uptrend is still there. You can equally see it here on a long time frame. You can see that the market is still maintaining uptrend. And you can see also that on long term, markets are above what the 50 days. I don't forget that 50 days is a very strong, strong, what's it called? Strong what's called indicator or moving average that both institutional investor and professionals, fund managers always look at. Why? Because it tells you exactly that means once you break it out down, that is where there is what there is a concern. And that's why I also take you back to what to weekly chart to look at what is this chart, this moving average doing. You can see it is when this thing comes down. That's why I say yes. We know that they've been very kind of slow in the market. Their opportunity was still dry. That's why we're seeing low value for the PFAs. But still, their indicator is still very that market have not touched that. They have not broken down their indicator. That's why I believe that coming back in Q3 is also possible because whenever you see that, you can see whenever they enter the market has remained above the line on the weekly chart. So I mean, it's a good one for the market. All we don't need is just for us to also keep our finger crossed and invest wisely and know the kind of stock this investor is playing and to take advantage of it. As we speak, market is still looking good because I said it earlier that the most of the matured market, their trading market, their bond market is also hitting new lows, and also we are still sell off there. Even compared some even when we have the differential meltdown, you can see most of their their fixed income yield or set down to that level. Tell you that people are looking at where, but I believe the only way you can hedge against inflation, only way you can hedge against anything called hedging, I said yesterday, is only in some sectors where you can see that your earnings can be closer towards to the inflation. And that's why I said in the coming master class, the two story I can give you the inflation, the return will double inflation figure to speak now. And those two stuff will come in 90 days that will double what inflation figure. And that is how to invest. Where even in this kind of environment, this kind of sentiment, this kind of situation, global economy, even down here, there are still some stocks or some sector you can play to have what double what inflation is doing today. That means you as an investor don't miss that gathering, and there will review all this stuff for you and take advantage of what information are going to be shared to increase your worth when trading is confident and at the same time to boost your worth, your bottom line at the end of the day. Yes, because of our time, we quickly look at those stocks that we mentioned. Look at what is happening. Vitafoam, we are seeing now on the decline side. Look at no internal oil rebounding after pulling back. Cadbury's taking a comeback in the market. Also, the NGS is time for me to also look at what is happening in me and Baker. Let's look at this chart now because of our time. Before we round up the class, let's go because it's a day chart. This is a day. We'll go back to what our daily chart as usual. But we want to start with what with Vitafoam to see the position of Vitafoam as to speak now. It's a live class. Let's see what the stock is doing now and at this particular time. Let's see the version the stock is having, how far it's going to go on the stock. Yes, as we speak now, the stock is trading below all the averages what we put down here, below the T line, and at the same time below what the 50 days moving average. This is a weak sign, and also if you look at here, we have seen a sign of weakness here on the daily chart. Yes, you need to watch for the reversal, but I think the pullback in the price of Vitafoam is opportunity for long-term position. But for traders, I always say that you must confirm a breakout before you also take position. But you also can look at what is happening in terms of momentum to know whether, because people look at a trend, but we look at momentum and what and volume. I tell you that momentum is very, very important. Your money flow is key, and that is what also your eyes will be. Yes, but is still looking down now, and that has completely confirmed from here. So looking down, you can hopefully look at it here. The blue line is almost crossing down. That tells you that you need to also to watch carefully in this stock. But let's look at what the 1 hour chart is saying about Vitafoam. Vitafoam 1 hour chart is not looking good. Also the same with what with the day chart. Let's quickly look at the internal. Let's look at what is happening in internal oil. Look at what is happening in internal oil. That will give us a clue of what to do with that now. Internal on a 1 hour chart, I will tell you there is a yes, here is still you can see that it's trading no flat on the wall. The other is a pullback. We can see that we can see on the 1 hour chart it's still above the T line slightly, resting above the T line. But if you look at the momentum indicators, we are seeing strong momentum on that stock. You can see where it is now. I can see strong momentum after that touch almost oversold region coming back again powerfully. But until breakout here, which we have seen, once it break out this momentum, that will be good. But morning flow is almost 44 for a 1 hour chart. Good. But look at the day chart for Ghana. Give us confirmation where the stock is now as we speak. As we speak now, the stock is slightly above the T line, trying to resist the decline, which is good. You can see it here. An uptrend was seen, and also you can see also that the momentum in the stock is still very strong, which I think I'm going to review what in the masterclass. They are where you see that you want to know that momentum in the stock is still strong. You don't need to panic out. When the stock has gone as well at the 575, as some people were calling me, I said, don't forget about the price of the buy. It's an opportunity. And also, if you look at momentum has been reviewed that you don't need to panic because they already said that there's still strength in that stock, and that is what you really want to look at when you are investing. When you see momentum in the stock, that's why it's pulling down. You need to show our patient that rather take advantage of that pullback to average down if what attracted you in that company is very, very much intact. But what I'm seeing here, I can see a positive move for stock. I'm not surprised that it's gaining this morning, and positive that is going to sustain is there if results hit the market and beat expectation. Also, don't forget that by this time next week, we're also talking about why in the new month of October, and that is the last quarter of the year, and that coupled with what a lot of seasonality and also the campaign of politicians will also kick off from the market. A lot of things will go to play out between now and end of the year. I believe that it has a was so that you saw what happened or what the Pencon has approved. These are the things that one word or the other they are substantial that you look at. And one for that if you look at what we call I call it this real estate back equities and commodity back equity. These are where as an investor you must look beyond the numbers and also look beyond the price you are seeing. Also look at policies and all this are going to play around in any sector, and that is what also we want to see in the banking sector. As we have seen already, expect a demand on what on that even on the industrial goods, because if the fully this marketing come on board, people that will be demanding for more building or buying or that means there will be more activities that will drive that cement industry and also the construction, and also I see a lot of business in that sort of with all this happening going to the future. Then let's quickly look at what is happening in Cabri. Let's chat Cabri fast because of our time. Let's look at Cabri. Can we still do a position in Cabri? Let's ask ourselves. Cabri Nigeria. Let's look at what is doing here. Yes, Cabri are not on a daily chart. You can see that yes, it's trying to went all this morning trying to resist this line, but I see that it's flat on what on the T line now, but below other moving average. I also was seeing strength trying to also come back at the stock, and money flow is already high around the 83. Is good for the stock for what a daily chart. These are good sign for the stock, but the number will also determine on a 1 hour chart. The stock is still looking for momentum is still strong on the 1 hour chart. Also trading above the T line. You can see it here, and also tested what a stronger a resistance at what at the 50 days exponential. This 50 days exponential is acting at what as a resistance to speak now. Tested it and pulled back here, but it once break it out, that will confirm more a big trend what in the market. For me, that is a good one for the stock. Let's keep our finger crossed. But let's quickly also look at the NGS group now. NGS group. Let's look at what is happening in NGS group. NGS group. What we saw is it what we also expect to continue? NGS group. Yes, NGS group on 1 hour chart. I can see momentum, strong momentum here. As we speak now, this is a good one. On a 1 hour chart, it's trading above the T line and above all the 50 days moving average. And this also, I tell you, the moving average is strong to what that tell you this stock has really banded, to cross the 50 days moving average. And for me, it's a good one for NGS. Good one. I can see momentum, but money flow as we speak is still very, very low and below 20. I didn't know for 1 hour chart. But let's look at the day chart for NGS. Before finally look at me and Baker to run the class to put the class report for today. Yes, on a daily chart, the stock, the NGS is still below the moving average, but it's a good sign that we're seeing there. That both the T line now to speak, good, and momentum is also good. After it has gone low to what over full region, you can see the importance of looking at other momentum. Look at here, low momentum was low but started coming up now. You can see that, and you saw what changed the next day. You can see it also going up as we speak now. For me, it's a good one, and also money flow does turn up now. But once money flow goes around 50, that's a strong this strength has come back to what to NTS for that, and that number, the fundamental also have a way to play on this. That's why as a chartist must also look at your candle to see reaction of people, whether there's any news, either economic news, company news, product news, change of management. It must reflect what on the candlestick. That should guide you at any given time. Me and Baker will be the last for us because of our time. Me and Baker, me and Baker, me and Baker. I see the stock more pulling back now. Me and Baker on a daily chart. But see, yes, that's why they say the stock is trading as we speak now. What would I call it now? It's trading below the T line. You can see it here. But we can see that money flow has been on a sign today. That's why that today around 20 turning up good one. And we'll see that where it is now, it's a sign that the stock can any moment take an uptrend. That means those that are seeing opportunity in the pullback can also catch other opportunities, especially in long term. But for traders, we must confirm what a breakout before we can take advantage. And for to confirm a breakout or reversal, we are already seeing the sign here, and this is how we're going to know where to what to jump into a position or what to not to buy into a position. These are very, very important things to look at. On the 1 hour chart for me and Baker, let's look at what's going to give us there. The chart. The chart will tell you that on the 1 hour chart, the stock is still very low in terms of momentum. And at this point, we want to look at where the reversal will be and when the move will start going up. But the pullback is an opportunity as money flow on a 1 hour chart still lead about 73 points. So it tells that there's still strength in that stock. Looking at the volume and the price, and for me, it's a good one that wants to also consider this stock for medium and long term for those that are income investor. Yes, on this note, to say thank you and also look forward to see you at the coming master class on Saturday. For those that are paying, I can see some alert this morning paying. Continue to make your payment. You have not lost anything because at the end of NPC today, for those that have paid the master class to have an information that will guide them on what to do between now and that day before the read class, and also can take position and go into the future for the last 90 days of the year. And I believe that I said earlier that two stocks that will make what times inflation figure in the next 90 days from that day of the trading. I say see you and enjoy the rest of your trading day.